Now, of course, all of us have heard about the recent pandemic going around, and that's of course that majority of Forex traders don't actually make money trading Forex. In fact, a recent study from eToro found that 80% of people that traded lost money in a 12-month period with a median loss of 36%. The SEC did a study as well, and they found that 70% of Forex traders lose money every single quarter, and typically 100% of traders lose money within the year. Another study in Taiwan was a longer-term study from 1995 to 2006, and that found that only 5% of day traders are possible. Now, why do I tell you this? It's because this is the reality. Not many people make money trading. And the reason is most people don't know how to manage their risk. And in today's video, we're going to discuss how to calculate a position size in Forex and how to do it properly so that you can actually have an account balance at the end of the day and not lose money. Now, when you first go on Google, you're going to search Position Size Calculator 2022. And once you have done that, or whatever year you're in, what you're going to want to look for is the link that says babypips.com. In the link in the description, I'm going to be able to put baby pips for you guys so you can check that out. Once you've done that, go to this website, and this website is going to help you calculate your position size in Forex. Now, there's a couple different things we need to know before we can calculate a position size. We need to know the account currency that our account is in. Our account currency could be US dollars, euros, yen, GBP, CHF, or whatever the case is. Plenty of currencies to choose from. Once we have done that, we also need to know our account balance. That is the amount of money that's in your trading account at any given moment. In this case, for today's example, we're going to assume that we have a $2,000 account. From there, we ask ourselves risk percentage. Now, risk percentage has to do with what percent of my account am I willing to risk. And that percentage obviously has a lot to do with your risk tolerance and your investments. If you're a riskier trader, you're going to be able to risk more percentage-wise than a more conservative trader. In the case for us today, we're going to use 2%, but my recommendation is that you find yourself wherever you're at between 1 and 3%, and once you find that percentage, you stick with it. The reason it's so important to stick with the same percentage every time is that if you risk 1% on a trade that you win, and then you risk 3% on a trade that you lose, you tend to be weighting into your trades, meaning you are showing more priority towards certain specific opportunities in the market, and that cannot bode well very long term. So your percentage is sitting here at 2%. Your last one says stop loss in pips. That is what we'll talk about how to do in a minute. And of course, the final piece is the currency pair that you're trading. Here's all of our options.
If you're like me, you're constantly looking for more ways to put more cash in your pocket. Steady is an app of over 5 million members with over $15 million of cash given in form of income boosters, rewards, and incentives. Steady is an app that I personally use to track my own income, but also a great place to add little sources of income. An example of a great income booster that Steady has right now on their app is getting $20 from Acorns. By simply depositing a $5 deposit into my brand new Acorn account, Steady will send me an additional $20 just by doing so. Through these partnerships that Steady has made, it is giving us great opportunities to add extra sources of income. Secondly, by going to the Work tab of the app, you can notice that I can find plenty of opportunities and jobs inside of Steady to give me a better chance of finding the job that works for me. So whether or not you are somebody that is trying to add additional income, track income they're making, or find a brand new job, or just trying to get small little boosters here and there, Steady is the app for you. Trustworthy, easy to use, user-friendly, and for me personally, it is the first income tracking app that I have ever used because I use multiple banks and smaller banks with multiple sources of income that is super hard to track. And guess what? Within 5 minutes, Steady was able to get it all in line for me. So all you got to do is go over to the App Store, whether or not you're on Android or iPhone, it doesn't matter, and look up Steady. It's a purple badge. You'll see Shaq's beautiful face, and download it today. I promise you guys, it's going to help you track your income and maybe just potentially put some more money in your.
So let's start by going to tradingview.com and going to euro dollar. And I'm going to do two different examples for you guys to find position sizes so you know exactly what your position should be via your broker, whether you trade on MetaTrader 4, MetaTrader 5, or some sort of online platform. So here we have euro dollar, and I'm going to drop it down to the 1 hour chart. And let's say, for instance, that we believe that the market from right here, right now, is going to go up. There's a couple different ways for me to measure what I need to do in order to calculate a position size, but the easiest way on TradingView is going over, first deciding what your trade is going to be. Now, obviously, if you go through my channel, you're going to find plenty of other trading videos on how to actually find opportunity. But in this video, we're going to go over here to the right side, and you can see that you can find long position and short position. A long position is when you want to buy euro dollar. That means you make money when the market goes up. A short position means you want to sell or short the market. That means you make money when the market goes down. So let's take a look really quick right here at a long position. Let's say I want to buy right now, right there. And I want my stop loss level to be below the wick right here. I want it to be below the price. I'm going to drag my stop loss to wherever I want it. And of course, my target is wherever I want to target. Say my take profit wants to be a previous level of structure. This is not a video about targets, but my recommendation as a side note right here, notice my risk to reward says 4.01%. My recommendation for all of you guys is that you keep your risk to reward ratio at 2 or higher, which means if you're risking $1, you're gaining $2. If you're risking $20, you're gaining $40. You never want to be in a position where you are risking at the same amount of your reward or risking, worse yet, less than your reward. Now, in this case, you can see our entry price is at approximately 0.98127, and our stop loss level is at 0.97851. Now, today I'm not going to teach you guys the math behind it, but in short, if I were to take that top number of my target, which is 0.98, or not my target, but my entry, 0.98127, and then I were to put my stop loss at 0.97851, the easiest way to do this is pull out the first number next to the decimal point and pull out the last number. And what is 812 minus 785? Again, what is 812 minus 785? And you notice in that case, you got about 27 pips when you subtract 812 by 785. Now, you don't need to know how to do that because you can see in the bottom right here of your risk column, notice below my mouse, it says 27.6. That means our risk is 27.6 pips, and I'm always going to round up on the decimal points, aka 28 pips. So this is on euro dollar. I'm going to buy. Let's go back to my position size calculator. $2,000 account, let's say I'm using dollars. I'm risking 2%. My stop loss, 28 pips, and my pair was euro dollar. And I hit calculate. It quite literally is going to show me standard lots is what you're more than likely going to be using through your broker in terms of your position size. 0.1429. You're always going to round down, so you're going to use 0.14. That is your risk, 0.14. That's your lot size you put into your MetaTrader 4 or MetaTrader 5. And in this case, you're risking 2%. 2% of 2,000 is what? $40. So the goal of this is to understand that you have a managed risk here at $2,000, 2% risk, 28 pip stop loss, and that's where we sit there. Now, notice this, guys. What if I were to change the same everything, but I'm going to change the currency to say Euro Swiss? What would happen there? Well, the first thing it's going to ask me to do is go and find my USD CHF ask price. How I'm going to do that is I'm going to go over to USD CHF. And then you will notice right here, here's our pricing, 0.98910. Then I'm going to hit calculate. And you'll notice now I have a brand new lot size. That's because this is not a one-size-fits-all approach. If you have a 28 pip stop loss on Euro Swiss, you're going to have a different stop loss on Euro Dollar as a different stop loss on Dollar CAD. Let's do another example. Let's say, for instance, I want to trade again euro dollar. But in this case, I'm going to go to the daily time frame. And in this case, I would like to sell from current price downward towards these lows with my stop loss at these highs. I can simply hit sell, measure my stop loss, measure my target. Obviously, this would not follow our risk reward rules. Make sure you have a 1 to 2 in this case. But for this example in this video, notice what I have, 197.7. I'm now just simply going to switch back to Euro USD, and I'm going to round up 197.7 to 198. I'm going to hit calculate, and it will give me my lot size at 0.02%. Now here's the reality, guys. The goal of trading Forex is not to make money. The goal is capital preservation. How are we ever going to make money as investors if we don't have capital in the first place? You ever heard that term, the rich get richer? It's commonly used. The only reason the rich get richer in times of downturn or times of recessions is because they had money in the first place. That's how life is. Your trading account is the same way. In order to gain in your account, you must have money first. And if you spend your time over leveraging or putting too much in terms of risk, 3%, 4%, 5%, 10%, 20% risk, a few losses can wipe out your entire account and you're back at square one again. I hope this video brought you some value. If it did, please click the like button and of course the subscribe button, and we will see you on the next video.